and welcome to our weekly market update. My name is Alejandro Zambrano, and it's July 29th, 2020 when we're doing this market update. I'm going to take a look at a broad range of markets and also talk a bit about what is driving prices and try to give you a bit of a heads up of what's happening this week on the economic calendar and economic events that could potentially move the financial markets. So that's what we're going to be doing today. And if you're new to this, my name is Alejandro Zambrano, and I am the Global Chief Market Strategist with ATFX. So what are we going to be doing then? Macroeconomic update, week ahead, and then take a look at major currencies, major indices, gold, crude oil, and cryptocurrencies. But before we begin, as usual, I need to show you this, and it's quite straightforward. Financial markets trading, unfortunately, is high risk, and we may lose all of our invested money. And I need to read this out. Okay, CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 67.07% of retail investor accounts lose money when trading CFDs and spread betting with ATFX UK. And you should consider whether you understand how CFDs and spread betting work and whether you can afford to take the high risk of losing your money. As well, I'm going to prepare this information, and it's my opinion on the market. And I'm going to let you know where I think people are going to be buying and selling. But it's just my opinion, and it's made with an informational purpose. It's not intended to be trade advice, and should not be treated like that either. Cool. All right, so let's begin. So who am I then, for people that don't know me then? So I lead a team at investingcube.com, which is a news website I produced. And we have a lot of content over there. And we have videos, quarterly market updates. We provide coaching. We provide research and education. And soon, hopefully soon, an indicator as well. And I'm also the ATFX Global Chief Market Strategist. ATFX, which is a broker, which is FCA regulated, and we'll talk more about them in a minute or two. Before ATFX, I was the head analyst at FXCM's London research desk. If you don't know them, they are still quite big, and they have, I think at one point they had like 250, 500,000 active clients. So they used to be one of the world's biggest retail brokers, and I learned quite a bit over there. I was also the chief market strategist at another broker called Amana Capital. So I've been doing this for quite some time, and I've been trading, working professionally like this since 2009 as like an analyst, but I actually started trading already in 2006. So I have a great deal of wealth of information that hopefully I can share with you guys too, so you can hopefully understand the markets better. So who are ATFX then? So ATFX is an FCA regulated broker, and they have different branches across the world that are technically their own independent entities, but we all sort of use the same ATFX name. And that group is has about 400 staff worldwide, and it's very well established in Asia and mainland China. And they opened an office in London, I think about 2 years ago now. And they've been growing rapidly in Europe. And they service countries like Spain, Italy, also Portuguese speakers, and German speakers, and English, of course. You can trade currencies, indices, stocks, and cryptos with them. And they have the premium education, which I just mentioned. This is it. This is a premium course I produced for them. So what happens here is about 4 hours crash course in currency trading, and I spent quite a lot of years trying to understand what the market, how the market works, and how to actually be able to be consistent in trading. And if you don't want to spend all the years I spent, or you may be already quite good at the market, but you're just missing that little extra piece of information, or you just want to have a few extra strategies, then you definitely want to check that out. It's actually free as long as you have an ATFX account. Okay, good. So what's the main talked about event? Gold prices. Right, so gold prices, what you're looking at here is a daily chart. And gold prices last week reached a new 2020 high. So we went up, as you can see, for a new 2020 high, and we were looking like we were going to head lower eventually, then pushed upwards. Why did that happen? Well, COVID-19 is the number one reason. We're going to talk about that in a minute. We also had the Dow Jones, which was under pressure and challenging that June low last week. So we had quite a sluggish week, but at the end we moved on lower. Why did that happen? Well, again, COVID-19. So what's going on with COVID-19 then? Well, we talked about it in the past, and I mentioned that we were most likely having a second wave of viruses in the US, and this is exactly what we're seeing here. We talked about it affecting over the last 2 weeks, and we're seeing a rapid rise here. So why did I start to talk about it 2 weeks ago? Because 2 weeks ago, we had already rising cases in places like California, and then you had new states like South Carolina, you got Texas, you got Arizona. All of these are starting to see higher numbers. In fact, I think about 50% of all US states are seeing higher numbers, not lower. And as an aggregate, they manage actually to lift things. And it really depends on where you go and get your data from. But we are seeing a new record high here. And I'm using data from Worldometer, which is using data from Johns Hopkins University. And so far, the market have reacted to this, but haven't reacted excessively, especially not the fact that we've gone upwards here. And I think one of the reasons for that is because the number of deaths remains low. So I spent some time investigating that, and I did a little chart. And what I've done here is that you have new cases in blue, and then you have red cases, deaths in red. Now, you can see here on the blue one to begin with, this is data from, I think it's Oxford University, and their data looks a bit different. In that situation, in their data, it doesn't look like we had a new record high, but we can ignore that for now because it doesn't really matter too much for what we're doing. What's interesting here is that we all know you get the disease, maybe 1 week, 2 weeks later, if you're unlucky, you'll die. So the cases tend to lead the deaths, and there is a lead time, again, 1 week, sometimes up to 2 weeks, right? So mathematically, using correlation analysis, you can try to figure out which is the best correlation between the two. So I did some analysis, and the best correlation is the cases compared with the deaths, but cases from 6 days ago. So cases from 6 days ago, the cases we had 6 days ago are going to tell us something about the number of deaths 6 days later. Does that make sense? So make it easy. If we had X amount of cases last week, it will tell me something about how many deaths I'm going to have this week. That is mathematically the best correlation, the 6 day lag there. So what I've done here is I have pushed the cases forward with 6 days, and you can see here how the number of deaths have not catched up yet because we're not really there yet. So, but ultimately, maybe from 6 days from now, we'll have significantly more higher deaths, and that's probably going to influence the financial markets in a negative way. Now, how much more? We need to be clever about this because in the very beginning, it was a very nice and tight correlation, right? And what happened is that in the beginning, the society, the American society, was not ready for what's happening. Some people were comparing this with a normal influenza, and people are not doing enough to protect themselves. But now a lot of people know what it's all about. The elderly are protecting themselves. Many of them, people are using face masks if they leave their homes. As well, hospitals are better prepared, I would assume, even though some reports from some places show that they're not. So the correlation between cases and death it's not as strong as it used to be. But what I did is I look at the number of cases versus number of deaths over the last 40 days and mathematically try to estimate how many deaths we're going to have in 6 days from now. And this is when we have this little line. So you can see if we would just compare this with the other one, then you would say, well, we're going to have 4,000, almost 5,000 deaths per day, which again, I don't think it makes sense. But if we look at the correlation, or not the correlation, but the mathematical relationship over the last 40 days, then it does still tell us we're going to have higher deaths, unfortunately. It tells us that in about 6 days from now, the daily death rate in the United States is going to be at 2,142, and this is based on what has already happened. The actual estimate can be about 350 deaths higher or about 350 deaths lower, but we're going to be around 2,142. And this by itself would not be a new record high. We would just go up here in the levels we've seen in May. In March, we had 5,000 deaths, so we are far away from that level. This could potentially soothe the markets, but I don't think so right now. I think there's a situation where the market is unprepared for this. We did see the Dow trade lower, right? When we first heard about the news, the Dow was trading at 28,000. You had that rapid decline, and then you had some stimulus from the central banks, Federal Reserve buying bonds, corporate bonds. So we had that corrective move there, but then now we're going lower. So we have had some of this pricing in. But I think when the number of deaths kick in, and when you potentially see shutdowns in some of the states, then we're probably going to go a bit lower. So even though technically it makes a lot of sense to buy the Dow Jones at the current levels, I do think we can go down to maybe 23,000 and maybe 21,000. I'll explain to you guys in a minute. Now, there's a lot of talk about, we're testing much more. That is what's influencing things. And yes, to some extent it is. So this is an updated chart, and this data here, the light orange charts shows you the number of tests. So you can see that the daily tests right now are averaging slightly less than 600,000 per day. And the dark orange or darker orange shows you the number of new cases. Now, if you look at this, because the number of tests really overshadow or dwarf really the number of positives, you can't really see the details, but we know that this is a new all-time high. Now, they created this nice little line here, and this is from John Hopkins' website. You can check it out. They call it percentage positive test, 7-day moving average. You can see it's going upwards. What does that mean? It tells us that yes, they're finding more people because they're testing more, but more the virus is spreading within the population. As far as I understand it, look at it like this. Imagine we test 100 people today, and we do 100 tests. All of them have the virus. All right. So percentage of positive, that's 100%, right? So come 1 week later, and we test 200 new people, and we find 100 people of them have the virus. So 100 divided by 200, that's 0.5. So then this ratio goes down to 0.5, 50%. So when this ratio goes upwards, it just tells you, yeah, okay, that will neutralize to some extent the increase in tests that you do. So if it was just about testing, then this number will go down, which it did until the beginning of June. And then from, I think, second week of June is going upwards. And that is because the virus is more prevalent. What's also interesting is that it's actually younger people in the US now that are getting it. And one of the reasons is potentially because of the opening bars. And that's going to be interesting because they already started to open some bars in Europe. And in the UK, people are really eager to go to the pub. So we'll see how that plays out. So just to give you a bit of more background on this, New York has imposed quarantine. So if you want to travel to New York State and you're from Alabama, Arkansas, Arizona, Florida, North Carolina, South Carolina, Texas, and Utah, you need to be ready to quarantine. This is interesting. Arizona warns that 80% of hospital beds are currently being used and that the healthcare system may be overrun in the coming days or weeks. So maybe Arizona is going to be the first one to impose not just a stop, because a lot of the states have said they're going to stop the reopening. Most likely, at one point, if this continues, they're not going to say, we're going to stop. They're going to tell you to maybe stay at home. So how is that going to influence things? You're going to have, at least in the short run, better data from the US, because the data we look at is usually a month or 2 months old. And then when you start to shut down again, you can have a situation where you have bad data again. And I think that is what's weighing on the stock markets. Here, for example, this is quite interesting. Texas have seen an increased number of people admitted to hospital, and a children's hospital is in Houston has now begun to admit adult virus patients. So they don't have enough beds in the normal hospital, apparently, so they're using the children's hospital to help the adults. And both Texas and Arizona, for example, are the ones that actually opened up early on. And in places like Miami, they have actually, or in Florida, sorry, they imposed new restrictions. So they're ordering bars in the state to stop serving alcohol. So no more alcohol if you happen to be in Florida. I remember they opened the beaches recently. I think like 2 weeks ago, 3 weeks ago, they opened the beaches. So you can go and enjoy the beach. And I think they have, and I think now for the 4th of July celebrations on Friday, I think they are telling people that you can't go to the beach. And here's Miami mayor saying that we may to at some point implement a stay-at-home order. And that's what we're seeing here, where the cases are going upwards and now people are starting to change their mind, and that again can influence things in a negative way. And I think that is the number one driver, and that's probably what we need to keep an eye on over the next couple of weeks. And I personally think unless they start to do something here to actually tell people to stay at home or impose some other things, I'm not a top expert on what's happening within every state, but overall, just reading American press, it looks like they still are far to go before they can stop this in the US. Okay, so that's the COVID-19 update for you. And what else? Let's talk a bit about what happened last week, because this is interesting. So last week, we had the PMIs from the Eurozone. They printed 47.5 versus 42.4 anticipated. This is the composite. That's your combination of the service sector and manufacturing sector. In the UK, the service sector also saw a very nice boost, 47 versus 40. And in the US, the composite was 46.8 from 37. They don't have an estimate for that. So what's quite interesting is this. We slowly going towards that 50 level. What does that mean? Below 50, the economy is shrinking. Above 50, the economy is increasing. What's good here is that we're seeing the economy in the euro area, in the UK and US, bleeding less, but it's still bleeding because it was below 50 the month in May, and it was also negative before that. So the last 3 months we have below 50. So we have seen contraction after contraction after contraction. So just because we're back at 47, it doesn't mean that we're back at 47 where we were. It just means that we're not as bad. But if you look at some other piece of information, so for example, this is from Danske Bank. This is when you look at Google, like the usage of Google applications to move around. And you can see that in Germany, we're down 11.4% from the same week of last year. And France down with 17.1%, and Italy down 16.6%, and in Spain down by 26%. Now this data is from June 22nd, so it's from Monday last week. I think they're gonna update this soon. But what you can see here is that at least some of this data is actually indicating that things are slightly better. And I've seen some data from Germany as well that indicate that things are actually coming back. And if we go back to places like China, this is the Financial Times China Economic Activity Index. So the index is now at 80, which is slightly higher than it was when Wuhan shut down. We're still not at the high of the year, and we're still a bit far away where we should be at this time of the year. The gray line is the data point for 2019. But we get there. Now, I think this should be taken with a pinch of salt as well, because these numbers were just around the new year of, at the start of the new year. And I think at that time, because of the Christmas period just before, we Westerners, we buy all these different gifts, right? We spend a lot on Christmas, and people just buy new stuff around the new year anyway. So that is I think that was the max, right? And then if you look at it already in 2019, you have a little bit of a slowdown in economic activity because the Chinese celebrate the Lunar New Year, which happens will happen in January 25th, 2020. So I don't think we would realistically, if you look at it, what happened in 2017 and 19, actually 2017-19 we did go down and then we quickly went up, so actually it's not 100% correct, but I think realistically we're not going to go all the way up there. But why am I showing you this? I'm showing you this because it does show that there's a way out of it. And if you can contain your cases and you can then slowly open up your economy, you will get out of this jam. And that's why I was so bullish when the Dow Jones was at rock bottom here, you know. That's why I was so bullish, because I had my analysis, and just by looking at what's happening in China, I sort of knew we were gonna bounce back at one point. The biggest issue here is that because there's a renewed spread in these countries, like California had things under control for a while, but because of the renewed spread of the virus in California and many other places in the US, we could probably see the Dow Jones move down again, unfortunately, potentially even lower than we are today. And unfortunately, if they wait much longer, if they're gonna lock down, they're probably gonna lock down in maybe 2 weeks time, maybe 4 weeks time. So you need to sort of restart. So we wasted this couple of months because they need to restart. So they need to shut down probably for another 1 month, 2 months, and then from there resume again, which means that exciting boost in GDP we're anticipated to see by the end of the year might not be there. And because, at least in the US, they would unfortunately be shut down for like 6 months, if not more, some companies that had money for a few months will go bankrupt and they will never reopen. So it's a big challenge, and that will be a challenge for investors. If you long only, if you like to go short, obviously that's an opportunity. So that is what's happening. In Europe, on the other hand, for now things are looking okay, but we never know, things might actually turn bad. All right, before we jump into the charts, let's just talk a bit about what could happen this week then. Okay, so it's Independence Day on Friday. So the NFP, they should have been on Friday, it's out on Thursday. We have data coming out from China. You get the official numbers from the PMI numbers. You get the China non-manufacturing PMI and the manufacturing PMI indices. They're out. On Wednesday, you have the private one, the CAC PMI, that's also out. That data is important because, again, China is ahead of us with a few months. So we want to see how are they dealing with it. Eurozone inflation is out tomorrow, but I don't think it's going to matter. Fed's Powell is going to testify, but I think he spoke already last week, so I don't think he's going to offer too much more input. But Treasury Secretary Mnuchin is going to speak, and you definitely want to see what he's going to say, because if we are going to have a new wave, then they will probably need to, support the economy again, and they might be already having something now ready for that, and that's why Stephen Mnuchin's speech is important. You have ADP numbers coming out. Last reading was for the U.S. economy lost 2.7 million jobs. But remember, that time I think people anticipated 9 million losses, but we only have a 2.7. This time around, people think we're going to have 3.5 million job creations. You have ISM manufacturing, which is for June. People think it's going to go to 49 from 43.1. I don't think that matters too much now, especially if they're going to shut down soon. Fed rate minutes, because you have the Fed chair, I think he's spoken at least 2-3 times since the last meeting. I'm not sure how much is this going to matter. And then on Thursday, we're known from payrolls. People think we're going to have 3 million new jobs versus 2.5 anticipated. Now, overall, the data will improve because we are looking backwards. This is backwards looking. This is June. All this data is for June. So it's just showing you what happened in June. I mean, we just finished June, right? But it gives you a snapshot of what happened at the beginning of the month. And in the beginning of the month, things were going good. There was low virus cases. So this data, again, is going to be a bit worthless. So I'm not paying too much attention to it. But the data comes out, and if the data is good, then we might still see higher stocks. So let's talk a bit about the Dow Jones then. All right, so from a purely technical perspective, we are at a very interesting level. So we are dealing with an uptrend. So the big picture uptrend. So we created a low here in March, then low, 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 and low. So we bounced from this level. And you have support here at 25,068 and all the way down to the low here from June 15th, which is at 24,550. If you take out that level, then we're probably going to trade to the next level and then probably down to 22,983, which takes you down to April lows. That might be it. That might be it. I'm not sure. It might be just going down, and then, but in worst case, I think we might actually go all the way down to 20,660. So that's what I'm looking at. And I'm trying to remember what happened last time. I'm gonna check. There's obviously, what happens is this. If I remember correctly, they put let's look at it together actually. Yeah, so I think in the US, this is when they closed down California on March 19th, and this is when they closed New York on March 20th, and this is the daily rate. So we actually saw immediately, they imposed the infections. This is the daily percentage change, and as soon as they imposed the restrictions, we saw a drop in the number of cases. So it doesn't really help us, but traditionally, you put the brakes on and you get a peak in the number of infections, and then it starts to go down, and then people start to price in the reopening. So I'm gonna try to figure that out. Hopefully I'll do that by next week. So the trick would be here. What's gonna happen? I think even the market is bottomed out March 19th and March 22nd. I think the market actually, there was one March 22nd. Actually, yeah, it's interesting. The markets actually bottomed out at the time when they imposed those quarantines, which effectively would tell us if they would impose the quarantines now, if we just follow the same script of last time, we would actually see a jump in the price. I am not 100% certain that that's going to happen this time around. But so let's be patient here. Now, if you think the new cases is just going to influence a small amount of people, it's going to be younger people, they're not going to be as badly hurt, and they're still going to be able to push forward the reopening, then this is a good spot to buy. If you, on the other hand, are a bit like me, you think things are going to get worse and people are going to get more panic, then the market, I would not sell here, but break to the June 15th low can take you down to maybe 23,000, and then maybe here, depending on what's happening, it could be an interesting level to buy. If this level doesn't hold, then you're looking at this. So the question is, why should we sell like right now here at these levels? I wouldn't be doing that because there's a situation here where we don't have the blessing. This is not a good level to sell right now because we're just at support. So we don't have like the ability to sell. Maybe on the break to the June 15th low, that could be it. But technically, we don't have a very solid pattern. It's only if you're like very, very bearish, and then you would say, okay, let's wait for a correction to 26,000, maybe 26,500, and then you sell with the stops above here, and then you look if we'll go down. So that is the Dow Jones. Looking at the German DAX as well, it remains healthy and remains in an uptrend. I said bullish above 11,521, and here one could potentially look to get involved and then targeting the upside. We're stuck within this descending triangle, which and it's actually a bearish pattern. So if we take out the low here, the different ways of looking at this, but a break to the level here can generate this slide. And I think that's the most natural thing. I think it's going to be difficult for the European stock indices to be able to hold up if we see a slide in the US stock indices. If we look at the FTSE 100, the FTSE 100 did have a nice little bounce from the levels we discussed over the last few weeks, and we're in a bit of a profit. If we take out this level here, it would mark a proper low here in the market. So this would be the new trend of funding level at 60.30 on a break to 63.58, and then we can probably go higher. I think we will probably go higher to this high level here. But again, I think it's going to be difficult for these indices just to remain supported by themselves. So what should we focus on then? Maybe gold then. So we talked about gold last week. We said we had a head and shoulders, left shoulder, right shoulder, and head. We had the break here. I said we are in an ascending triangle. We had the break, we went upwards, and then went lower, and then went upwards. And if one is not in the market today, I will look for a bit of a pullback. So if we go down to 1759, I think people are going to be buying here, and then they're going to target. So you have the ascending triangle that has a target of 18. The ascending triangle has a target of 1850. So that would be a good trade here. All the challenges with this one, yes. Fortunately, there is. So you remember when things were really hectic? Gold lost its safe haven appeal, and it dropped with 14%, and it bottomed out pretty much around the same time as they put the restrictions on in the US. So it doesn't have that same safe haven appeal. What's the second thing as well? The big challenge is that retail investors are already long. You can see that because with some brokers, they will tell you their positioning. So I looked across 3 different well-established brokers that produce positioning, and around 65% of their books are long, of their clients are long. So when the retail investors are already positioned, it's actually an indication that it's a false move, and that could indicate, that could explain why it's so difficult for gold to rise. But I will continue to be bullish for now. You have US oil. So this is US oil, and this is this is better. This is the August contract. Now, it's been quite some time we spoke, so I don't remember exactly the levels I shared with you, but this is the analysis I've been using for the last couple of days. And we bounced my buy spot at 38.10. And it might be sufficient to have stops at 35.75. If you want to stay out of trouble, then you look at 34.763. And I think we can go upwards. So what's the challenge with this thing then? Well, I think it's unrealistic that we're going to see much higher prices if the US needs to shut down. But what's interesting is this. Dow Jones is bullish. Crude oil prices are bullish. The German DAX is bullish. Most things are still bullish. So my view on the economics still hasn't been fully priced in. And I would focus more on the technicals than on my macroeconomic skills. If you follow any macroeconomist, you'll see they can be right, but it might take 6 months, 9 months. I know people that have been calling about a slide for ages. There are some really popular men and women on Twitter with 50,000, 70,000 followers, and they are always banging on how the world is bad and how we should see a massive slide. And yeah, every year or so, every few years, they might get it right. But they've been wrong for years in between that. So here's a nice bet really against that. And the idea is just to be bullish from here for this to go upwards. But if you want to trade with the news and the trend, then gold is where I will look. Other stuff, New Zealand dollar versus the USD. I think even though New Zealand has been able to withstand, I mean, they were able to clear their, they don't have any cases as far as I understand. And they had 2 cases recently, but they were foreigners. They were not like homegrown cases. It was, I think, two people from the UK that went to visit a funeral over there, and they had the virus. But I still don't think that New Zealand by itself, as a currency, is going to be able to withstand the pressure. So here you have a descending triangle. So take out these levels, and the descending triangle say we can go down to 217 points. So this is where I would be looking. If you look at the euro dollar, the situation is much more mixed. So we talked about selling here for quite some time now. The idea was to sell at 1280, and we've been moving with my in line with my analysis for quite some time. There might be a situation where you have people saying, all right, Europe is doing okay, US is not doing good, so sell some dollars and buy some euros. That might be it, but I wouldn't be working with that because that sort of simple analysis hasn't worked for a long time. When things really turned bad, people bought the dollar, and it wasn't that they necessarily bought it against the euro. They sold the pound, they sold the Aussie dollar, they sold the New Zealand dollar, they sold Mexican peso, Turkish lira, what else? South African rand, Singapore dollar, all these smaller currencies that were sold off. And that is what helped the dollar to move down. Now, from a technical perspective, I remain bearish below the June, actually remain bearish below 134. 113,676, and we are in my sell zone. We might go up maybe to 1330, but as long as trade below itself, I think we're going to go down. And from the big picture, as long as trade below the 2020 high, I'm going to be bearish. GBP versus the USD, the trend is bearish below 25.44, and I think we're going down to a support, but it's not like a great opportunity to be traded. But if we're really bearish, then being bearish between 124.27 and 125.44 is what I will be looking at. Dollar yen is also bullish from support, and I had an idea last week about being bullish from here. I revised that to be bullish from lower levels, and it does look it's kind of trying to take this out, and I think ultimately we're going to go up to 109. This is though contradicting with what we're seeing in stock markets and interest rates for that matter as well. Cryptos, let's take a look at cryptos, and if you have any questions, just put it in the chat box. So Bitcoin, so this is Bitcoin, and unfortunately, we were in a nice little bullish ascending triangle type of pattern, but that has now given up. So it's a very quiet market right now, and suddenly we're dealing with more of a rectangle, if anything. I wouldn't spend too much time on this one, but it looks to me that it's trying to did try to go upwards, did not work out, and it looks now we're sort of stuck within this level. And if we trade below 8,632, I think we're going to go down to 7,000, and then probably down to some 5,000 again. And then if you take out the upper level here, we're going to go substantially higher. You had Bitcoin Cash as well, which I had really high hopes for. So you can see from here up to here, we're stuck in a big sort of ascending triangle, and we had a few setups here. We're looking, and even here we had a small ascending triangle, and I was looking to buy at $281 per coin. But what would have been interesting, if we would take this out, we could have potentially risen all the way up to 481. But now this is no ascending triangle anymore. In fact, we traded below it like that, and now we have a bearish bias here. The problem with this though is that trading the ascending triangle on the break of the upward sloping trend line is a bad idea. Trading any triangles by that matter is a bad idea. Most of the time, triangles are quite worthless, even though they work a little bit better in cryptos. But most of the time, they're just rubbish because you will just end up redrawing things. The only time it makes sense is when it was like this. You have that ascending triangle. Take that out and we can probably go upwards. So what's happening here then? I think this is morphed into some sort of, it's morphed into some rectangle. That's it. So we morphed into a rectangle, and we're probably going to go up to 244, and we can be bullish and soon bearish on this market. Okay, Guys, do you have any questions? Just put them in the chat box, and I'll try to do my best to try to answer them. Okay, so we have Stefan here. Why do you think the market has gone dead in the last few weeks? Do you think things will move more in July? And then he says, the cat stuck in no man's land. So I think what's happening here uh, with the markets is just that we're having this typical holiday period type of activity. Obviously, most people are locked up at home, but people are starting to take some time off. I took Thursday last week off, and I think before that I took also a day off. And next 2 weeks are gonna be good in London. Good in London means it's not raining, and it's like 25, 26 degrees. So I'm probably gonna take a week as well off. So I think that's just starting to influence the fact that I'm not trading. No, not really. No, rather what's happening is it's just that I think we're just having like holiday mode influencing things. And then when you have the central banks, they're always intervening, right? So they're intervening. They intervened on the Dow. It was on its way down. They intervened. Um, at least bearish people that wanted to sell. I mean, I think most of them have given up hope. So I think that's the challenge. A lot of intervention and then holiday period. And because of COVID-19, the way it's progressing, I think though there's going to come a situation now where the financial system is going to come under stress again. So we could have more activity in July, probably 6 days from now or something like that. About the dollar cap, so we got 2 questions. Good morning, Mark. I hope you're doing good. I was thinking about you actually. I haven't seen you for a while in the chat, but I'm happy to see you here. Thank you so much, Mark. And we have Maurizio as well saying good morning, good afternoon. And okay, so Mark had to leave. Okay, I'm still gonna reply. And we have Shahzad. Thank you so much for joining us. And UK Kenny. All right, so we got a question about the dollar CAD. So let's take a look at the dollar CAD. So this is the dollar CAD, and what happened here is that crude oil is not going up so much more anymore. You have risk on because of the COVID-19, and also in the dollar index. Just to give you an idea, dollar index we reached some very low levels. So we moved really close towards the 2020 low and very far away from the 2020 high. And over the last couple of years, the trend has been bullish in the dollar. And technically, it still is bullish as long as you're above this low. So I think all of that kicks in and you started to see some strength in the US dollar. And in the case of the Canadian dollar, we went up sharply because we went down sharply and then we needed a bit of a correction. And then at one point they turned neutral. We could have broken lower, or could have broken upwards. But what happened ultimately is that we actually went higher. So what's going to cost us to go much lower? What's going to cost us to go much lower is if somehow miraculously we don't have more COVID-19 in the US and we can just reopen and go back as usual. What can that influence things then? Those 2 trials. We have 2 trials on human trials, phase 3 trials. The challenge though is that it's not going to happen right now. People think that even if it would develop, it will know by the end of the year, and then maybe early next year we'll be able to distribute the pills. Of course, by the time, guys, that they say we have a vaccine, stock markets probably would have moved up higher before that. and then because I think that's the thing, right? Markets start to price things in. That could also explain why we're not much lower. But for now, fortunately, the way things are looking, you know, number of deaths are still low in the US, but you soon have this pushing upwards. And I think that's going to start to work people. So I'm bullish in the dollar CAD. I would not be buying it up here. If possible, we have a bit of a correction. When I did this, I anticipated quite a sharp drop. It might not be as sharp, but I'm still going to stick with that view. And maybe have a 50% to 61.8. Maybe you can push this up a bit, but I think ultimately we're going to trade higher and not lower. And we'll probably trade at 38 or so over the next few weeks, and then maybe 39, and then maybe 40. It really depends on what happens and if this scenario quickly kicks in. Okay. Good morning, Nikos. I hope you're doing good. If you guys have any questions, just put them in the chat box and I'll try to do my best to reply. Otherwise, we're going to wrap things up. Okay, so we don't have any questions or any more questions. That's all good. I didn't announce that we're going to go live today, so it's only if you've been subscribing that you got this notification. So if you do think you did miss out and you did want to ask me questions, then make sure to subscribe. And when you subscribe, there's a little bell button. You'll get that notification as soon as I go live. I'm still working on the schedule here, how we're going to do things. And so it's not like a done deal yet. Unfortunately, I'm waiting for legal team to come back because I have developed this indicator, support and resistance indicator, with the help of the Investing Cube team and a few other people. And that indicator is going to provide more short-term levels. So if you're interested in scalping and day trading, then you're really going to love this. Now this is going to come out, it was supposed to come out already last week, but we're waiting in for approval from the legal team before going live. And then the idea would be to host a webinar on that, maybe 1 or twice a week. So things are changing, but unfortunately it hasn't happened yet. So for now, the next webinar is going to be on a Thursday. And if we still don't have the indicator sorted or so, we might change things again. I think ultimately we'll do 3 updates a week. Before we're doing 5, but we're going to do 3 a week. And the one on Thursday is going to be at 9:30 as usual. Okay, guys, have a beautiful day and a good day. If you do have any questions for me, as always, you have my YouTube. Sorry, not my YouTube. You have my email, info@investingcube.com. You can also reach out to me via Twitter at AlexFX00, and on Twitter as well, you find more information of the different services that we offer. And if you are interested in the coaching as well, make sure you ping me. And we also have a day trading course. And for more on this, I just suggest you check out investingcube.com, and you'll find all the different links up there. Let's see if I can show it to you. So if you click on Learn to Trade, you got the Forex course, trading coaching. And you have also some of the content as well that are your trading summit in 2019. You can learn quite a bit there. Get some free beginner stuff as well, trading Q&A. So if you have questions, actually, you can put here, and me or somebody else from the team at Investing Cube is going to answer. Have a great day, guys, and I'll see you guys on Thursday. Thank you, and bye-bye.